investment funds, private equity firms, and related financial entities have emerged as primary targets for sophisticated cyber attacks, not because they hold vast client assets or process high volumes of transactions like retail banks, but because they serve as unique nexuses of sensitive, time-critical information. For modern threat actors, the real prize lies not in immediate theft, but in long-term informational access and its covert monetization. Of course, if the opportunity presents itself, few attackers would refuse the chance to extract funds directly. However, in the overwhelming majority of cases, that is not the primary objective, largely because successful direct theft in this sector is exceptionally difficult to achieve. Multiple safeguards, ranging from multi-layered payment verification and counterparty authentication to stringent compliance checks, significantly reduce the feasibility of unauthorized financial transactions. Moreover, investment funds typically do not control client accounts directly, nor do they hold substantial liquid assets themselves. They are, in essence, asset managers rather than asset custodians. This operational structure removes the most obvious target, money, from the attacker's reach. But what remains is arguably more valuable: real-time visibility into high-value decision-making processes. The strategic aim for most advanced cyber intrusions targeting the investment sector is the silent establishment of surveillance infrastructure. Once in place, this allows attackers to monitor communications, analyze document revisions, track calendar activity, and map relationships between external advisors and internal committees. Monetization follows a different path. Rather than extracting money, attackers extract insight. And when shared with black market trading networks, this information becomes a powerful instrument of financial speculation. In a world of leveraged instruments, timing is everything. Even minor informational advantages, when leveraged appropriately, can produce enormous profits. Cybercriminal groups now collaborate with shadow trading desks to exploit precisely this advantage. The information harvested is used to anticipate deal announcements, capital raises, strategic divestments, and regulatory actions. This leads to targeted trading in related public equities, options, or derivatives well before official disclosures. A particularly illustrative case involved a European mid-market private equity firm. Over the course of several months, unknown attackers maintained persistent access to executive assistance devices. From there, they monitored board meeting schedules, recurring communication with specific legal and advisory firms, and tracked the version history of key investor updates. Without ever breaching the firm's core financial systems or causing a disruption, the attackers harvested enough intelligence to trigger a trading pattern that coincided with 3 separate acquisition announcements. The risk surface is broader than it appears. It includes not only managing partners and CIOs, but also their executive support staff, investor relations coordinators, legal advisors, and even external consultants. These individuals may not generate strategic content themselves, but they serve as conduits through which sensitive information flows. Cyber attackers understand this dynamic well and often deploy spear phishing and social engineering tactics to exploit it. Executive assistants, for instance, frequently have access to internal calendars, file sharing platforms, and privileged email threads. Their accounts are often less protected by advanced identity controls, making them ideal entry points. In the past 2 years, the threat has been compounded by decentralization. Investment organizations in adapting to hybrid work, have adopted an ecosystem of cloud based tools, shared environments, and cross border collaboration platforms. While these tools improve productivity, they also create a fragmented security perimeter. Critical signals are no longer confined to a centralized data room. They are diffused across Zoom calls, Slack messages, Google Docs, and calendar metadata. For attackers, even partial visibility into this digital exhaust is often sufficient to reconstruct probable future events.